on. Get a little sector specific then, and banks as a sector continue to reel under pressure for the month of August so far, while HDFC Bank and Federal Bank happen to be the only two private sector banks to hold on to the green as well. All major PSU banks are seeing a decline coming in. Gaurav is standing by with more updates on how you can just sort of decode the space and what is really happening in this space. Over to you, Gaurav.
Performance for the key banking name has not been actually strong for the month of August. In fact, when we talk about August, we have already got HDFC Bank and Federal Bank who are trading in green, and other than that, the other banking names are actually trading in red. But when we talk about Nifty PSU sector, specifically in banking, we are seeing this index down almost by 6%. In fact, we have got SBI, PNB, Bank of India who are trading almost lower than 7% each, and we have Union Bank trading almost lower by 11% in the month itself. But what are the reasons? So first, let's talk about the cost of deposits. We have already seen the deposit cost increasing by PSU banks despite the comfortable CD ratios that we have seen. We have got Bank of Baroda, Canara Bank, Union Bank actually increasing this deposit rate almost by 5 basis points for 6 and 12 months tenure, and we have also got SBI Bank who has actually increased its deposits rate almost by 10 basis points for the same tenure. Now this impact is not going to be immediately in terms of net interest margin, at least in the next quarter, but this actually shows some kind of competitive intensity which is rising, specifically in PSU Bank as well, and in the long term this will create some impact on net interest margin. The next one is that credit cost, which is likely to normalize. We have already seen this trend in the private sector banks, and public sector banks are likely to follow as per analysts. And lastly, when we talk about some bank specific issues, we have already seen SBI and PNB Bank facing some issues with the Karnataka Bank, which creates questions around the delinquencies. We have already got RBI who actually imposed penalty on Union Bank of India for non-compliance. So these issues are already there. Lastly, when we talk about valuations, now these banks are actually returning to its one-year average price to book ratio, because now analysts believe that there are no specific triggers when we talk about target price hikes in the coming days, and there are some industry-wide overhangs as well, like regulatory changes in the ECL norm, which are specifically going to impact the public sector banks, and recent LCR requirements as well. So definitely watching out on public sector banks specifically because of these issues which are arising, and specifically in terms of valuation, now that these banks are hovering somewhere around one-year average of its price to book value.
If you like this video, then like, share and subscribe to ET Now.